It's your Carib Money Report for this week. I am Kimberly Ramkalawan, and this week we'll look at energy moves in the region, from Apple's big carbon credits purchase to Shell's FID on the Aphrodite field. We also zoom into Acado's takeover of Massy Distribution Jamaica that has raised some flags for its Fair Trade Commission. To get some clarity, we speak to Michael Cooper, Head of Portfolio Management and Trading at Firstline Securities. All this coming up in less than a minute. Makers of the iPhone, Apple is looking to make an impact on its climate social responsibility with a big purchase of carbon credits in the Amazon. Big tech firm Apple is attempting to reduce its carbon footprint by purchasing Ghana's carbon credits. The iPhone makers purchased credits from the South American country's 2019 stock, which will directly contribute to Apple's corporate climate goals. This isn't the first carbon credit purchase from the Amazon sharing nation of Guyana, as back in 2022, American oil firm Hess Corporation became the first to do so, buying 1/3 of the carbon credits issued to Guyana at a cost of about $750 million. Amazon was able to pay $15 each, amounting a total investment of approximately 313 million Guyanese dollars or $1.5 million. The move is said to be a representation of climate leadership from the global south. Ghana says it monitors, reports, and verifies the carbon stored in its trees, and that amounted to over 19 gigatons. Under an international mechanism called ART-Trees, credits are issued based on the carbon stored in forest. According to Apple in its 2025 Environmental Progress Report, the jurisdictional program includes all 18 million hectares of forest in Guyana, about 85% of the land mass, and enables the country to benefit from its historically low deforestation rate while funding low-carbon development priorities. Shell Trinidad and Tobago Shell, a subsidiary of Shell plc, has taken a final investment decision on the Aphrodite project, an undeveloped gas field in the East Coast Marine Area in Trinidad and Tobago. Aphrodite will allow Shell to incrementally expand its integrated gas business by building on existing developments in the ECMA, one of the country's most prolific gas-producing areas. The ECMA is currently home to Shell's largest gas-producing fields in the country, including Dolphin, Starfish, Bounty, and Endeavour. Once online, this field will serve as a backfill for the country's Atlantic LNG facility. The increased production will help to maximize the potential utilization of Shell's existing assets. According to Adam Lomas, Senior Vice President and Country Chair of Shell Trinidad and Tobago, this investment is testament of our commitment to help secure the energy future of Trinidad and Tobago on several fronts. By increasing the gas supply to Atlantic LNG, the project will not only serve to fortify the domestic gas market, it will also boost the local petrochemical and power generation industries. Development of the Aphrodite field remains subject to receipt of all applicable regulatory approvals, and once approved is expected to start production in 2027, with an estimated peak production of approximately 18,400 barrels of oil equivalent per day. In other energy-related news, the region's movement in implementing climate-safe energy initiatives appears to be lagging behind ambition. This according to Energy Chamber of Trinidad and Tobago's chairperson, Mala Baliraj, speaking at the opening of its Carbon Sustainable Energy Conference 2025, with the team adapting and recalibrating. She remarked that while much of the discussion on sustainable energy in the Caribbean focused mainly on the electricity sector and investments in renewable energy, there was a need to pay attention to the industrial sector, or what she described as the hard-to-abate sectors. Pointing to several global shifts already identified, she urged those in the business of energy to take a hard and honest look at where they are and what is needed to close the gap. This year's conference lasted for 2 days and saw energy giants in the regional sector, from Trinidad and Tobago to Guyana, speak on the industry and what was needed to drive the impetus for sustainable energy. One law will be enacted to regulate Eastern Caribbean countries engaging in citizen buy investment programs. ECCB Governor Timothy Antoine gave the update during the St. Kitts and Nevis Investment Gateway Summit held earlier this week as he explained how the regulator will work.
But that regulator will not just have a single enabling law, it will set common standards. So whether those standards are for due diligence, whether it's for outsourcing, whether it's for marketing, whether it's for how we engage developers, there'll be standards to guide, to ensure. Because what we must do here is to minimize regulatory arbitrage and at the same time, as far as possible, minimize, if not eliminate, unfair competition among our 5 countries. The regional regulator will do that by a single law with common standards.
It's envisioned that the regional regulator will be an independent body separate from the ECCB, while he shared where the committee had reached in having it established.
1 from each member country, plus the OECS Commission, plus CARICOM Impacts, and CARICOM Impacts plays a key role in due diligence as we speak, and the ECCB. That's the 8-member team or 8-member body that is overseeing the preparation of this legal framework. Where are we on this road to this regional regulator? First, having signed the agreement with the US in February 2023, our heads of government then moved to establish or sign a memorandum of agreement. As we speak, we are now in a position to submit, as we have done, our draft legal framework.
Governor Antoine currently serves as chairman for the Interim Regulatory Commission, which the 5 CIP-CVI countries appointed to oversee the establishment of the regional regulator. A call for greater collaboration in the region on the tourism front was heralded by Barbados Minister of Tourism and International Transport, Ian Gooding Edgehill. He was speaking in the capacity of chairman of the Council of Ministers and Commissioners of Tourism as he launched the Caribbean Tourism Organization CTO's Reimagine Plan 2025-2027 held in New York this week.
This week we come together with purpose and pride, determined to chart a course that is innovative, inclusive and sustainable. The 2025 evolve the wisdom to collaborate and a commitment to lead. Importance of regional collaboration. For decades, the Caribbean has shown that when we work together, we thrive together. We are a connected community of innovators, dreamers and doers, and our Caribbean tourism. Caribbean Week is a declaration of who we are and where we are going together. At the end of the day, we're simply stronger together.
This year, Caribbean Week is being observed in New York, along with its Caribbean Heritage Month. CTO Secretary General Donna Regis Prosper remarked on the coming together of the region for the purpose of marketing the Caribbean.
Caribbean Week is more than just a gathering. What we know to be true as Caribbean people, it's coming together of over 25 nations, bringing our culture and the best of who we are to the international stage. What I do as Secretary General, I do it along with a team who's highly supportive towards the promotion of this region. One Caribbean, one voice, one sea.
Barbados held its Trade and Innovation Expo this week. Put on annually by its Manufacturers Association, the event aims to provide local manufacturers with the opportunity to showcase their products. Some over 25 local businesses got the chance to present their unique selling ideas, from fashion to cleaning agents and foodstuff, as well as technology-related services. Present to check out the exhibition was President, Her Excellency the Most Honorable Dame Sandra Mason, who toured the venue and engaged with exhibitors at various booths during her visit. This year, the ration pack was a hit, a dehydrated packet ready-to-eat meal made with local produce that can be used in the event of a natural disaster, which was launched at the event this year. BMA Executive Director Sharday Boyce described the event as a success this year after having returned to the Expo Fair in 2022. She remarked that much of the items present were of high export value, putting Barbados innovation on display. Much happening in our region. Carib Money Report here to keep you covered. We take a break now. When we return, it's your Market Trends Report.
We want you to advertise with us. Join us as the premier business magazine and news outlet covering the Caribbean. Contact us today at 868-783-5094.
Welcome back. It's now time for your Market Trends Report. Jamaica's Fair Trading Commission (FTC) has escalated its review of Acado Limited's, formerly Caribbean Distribution Partners, proposed acquisition of Massy Distribution Jamaica to a Phase 2 review. This advancement indicates that the FTC has identified significant competition concerns during its initial assessment. Acado Limited, a 50-50 joint venture between Goddard Enterprises Limited and Agostini Limited, formerly Agostini, announced its intention to acquire Massy Distribution Jamaica from Massy Holdings in February. This deal was originally anticipated to close by the end of the third quarter, which concludes on June 30th. The FTC's decision to move to a Phase 2 review comes after Acado requested the Commission's non-objection to the acquisition. The Phase 1 review, which was completed within the standard 30-day time frame, led the FTC to conclude that the acquisition raised competitive issues warranting further investigation. Both Acado and Massy can propose remedies to address the FTC's concerns. A final report will be published upon the review's completion. This isn't the first time Massy Holdings has faced FTC scrutiny in Jamaica. In July 2023, the company made concessions during its acquisition of IGL St. Lucia IBC Limited to obtain the FTC's non-objection. The outcome of the Phase 2 review will determine the future of this acquisition and its potential impact on Jamaica's distribution market. The Trinidad and Tobago Stock Exchange recorded a volume of 25,285 put-through transactions valued at $609,731 TT dollars. Market indices saw declines ranging from 1.02% to 1.83% in 3 indices and advances of 0.05% in 1 index. The top 3 securities traded for the week were NCB Financial Group Limited, Massy Holdings Limited, and Trinidad and Tobago National Gas Limited. A total of 7 securities advanced, with LJ Williams Limited increasing the highest by 15%, as well as Trinidad and Tobago National Gas Limited by 6.84%. There were declines in 12 securities, in which GMMB Group Limited and Grace Kennedy Limited fell the most by 7.83% and 4.37% respectively, as some of 7 securities remain unchanged. The Jamaican Stock Exchange reported a sum of 41,120,839 units valued at $278,590,267 Jamaican dollars traded for the week. The top 3 securities traded for the week were Trans Jamaican Highway Limited, Wayton Energy Limited, and Sagicor Select Funds Limited. Advances occurred in 21 stocks, in which Berger Paints Jamaica Limited rose the highest by 7.34%, alongside 138 Student Living Jamaica Limited Variable Preference by 6.35%. A total of 31 stocks declined, with Margaritaville Turks Limited Jamaica Broilers Group decreasing the most by 25.14% and 10.56% respectively. Overall, 12 stocks traded firm. Moving to Barbados, where its stock exchange recorded a volume of 141,395 shares, valued at $200,869 Barbadian dollars, which traded on the regular market for this week. CIBC Caribbean Bank Limited captured 2/3 of the market, with 95,500 shares traded. Second to this was Epley Caribbean Property Development and Value Funds SCC, gaining almost 32% of the market, with a combined sum of 45,369 shares traded. Overall market activity involved a sum of 13 stocks on the regular market traded firm. The Eastern Caribbean Security Exchange market reported a sum of 7,215 shares, valued at $38,638, traded for the week. The top three securities traded for the week were St. Kitts Nevis Anguilla National Bank Limited with 2,585 shares, SL Horsford and Company Limited with 2,500, and Eastern Caribbean Financial Holding Company Limited with 990 shares. Overall, 5 securities remain unchanged. Some cause for concern in Jamaica. Up next, we talk with Michael Cooper to help us understand what this all means. Stay with us. As you would have heard in our market trends report, the Acado takeover of Massy Distribution has raised cause for concerns over possible breach of anti-competition practices. To help us gain some understanding, we now chat with Michael Cooper, Head of Portfolio Management and Trading at Firstline Securities via Zoom. Welcome, Mr. Cooper. Thanks for taking the time to join us on Carib Money Report. Jamaica's Fair Trading Commission FTC is expressing concerns over the acquisition of Massy Distribution Jamaica by Acado Limited, resulting in the transaction being advanced to a phase 2 review, with a report expected to come forward by the end of June. Can you give us an idea of what would have raised the red flags to begin with? And Acado having its base in Trinidad, does the FCC in Trinidad and Tobago get involved?
Right. So, thanks for having me. First of all, I'm very happy to be here. I think that what triggered the concern is the fact that Acado's parent company, which is Agostini Limited, which has emerged as a major conglomerate in the region, especially when it comes to distribution of various consumer goods through acquisitions, right? And one of the companies that they acquired recently was Health Brands Limited in Jamaica. Health Brands Limited is, according to the FTC themselves, the largest supplier and importer of pharmaceutical goods into Jamaica. And the combination of Agostini as the parent company owning Health Brands and owning Acado, or being one of the two owners of Acado, the other owner being Goddard Enterprises in Barbados, triggered some concern and additional investigation or research into whether or not this would diminish competition in the overall consumer goods sector in Jamaica, right? As far as Trinidad, I don't anticipate that there would really be any major change or any involvement from the equivalent of the Fair Trading Commission in Jamaica and its counterpart in Trinidad, because ultimately they're discussing the competitiveness of the market in Jamaica, right? And the concern is there in Jamaica. One of the things that I'd like to bring to the attention of the viewers is that there is a global trend towards consolidation, right? So the same concerns that you have in the Caribbean, you'd also find in the United States, in Canada, where increasingly a smaller and smaller number of companies through acquisitions or through other means are controlling a lot of the distribution and production of key goods in the consumer sector.
Can you give us an idea of the legislation in Jamaica that applies to this situation? Can you go into a bit depth of what legislation is being impacted here? What legislation is in place to protect investors as well?
Yeah, well, I'm definitely not a legislative expert or a lawyer, but the Fair Trade Commission is part or the result of legislation in Jamaica that is meant to protect consumers and others in Jamaica against monopolization or abuses, right? And my understanding of the legislation is that exactly what we're seeing here, right, which is a process whereby any acquisitions that are happening in the country that of significant enough scale would be reviewed by the Fair Trade Commission to ensure that companies are not in a position to abuse their pricing power in Jamaica. This has happened with several other acquisitions. In many cases, they would get some sort of approval. In some cases, the approval is contingent on similar to what would happen in the US, where there's a merger or an acquisition, and the two companies combined may represent 30 different brands, and the commission may require that one or two or more of those brands be sold to another company or be set up as under a separate company to avoid concentration of ownership in that particular market. So my suspicion is that, assuming that there is some sort of ruling or finding that Acado is posing a threat to the competitiveness of the market in Jamaica, that there may be a recommendation that some of those brands be divested either into separate companies or offered to other companies in that market in Jamaica.
You spoke about what might be the outcome. Can you give us an idea what are the potential outcomes? Explain the process of the implications of this phase 2 review within the framework of Jamaican competition law.
Sure. So one of the outcome that's probably the most desirable to Acado is that the FTC determines that in fact there is no threat to the competitiveness of the market and that the merger can proceed without any inhibitions or restrictions. The other outcome is that there would be a finding that this does compromise the competitiveness of the market in Jamaica, in which case they would then need to divest of certain brands, transfer distribution rights to another company, or the worst outcome would be that the merger is not allowed to, well, worse from the point of view of Acado and probably Massy, who are two willing participants. One wants to sell, the other one wants to buy, right? That the FTC decides against allowing the merger to happen, in which case the two companies would have to go back to the drawing board and figure out another way to achieve the objectives that they were seeking through that acquisition.
What would be some of the areas that both parties would need to address if they have to go back to the drawing board, as you mentioned, to allay any concerns of being anti-competitive? What could they do in such a situation?
Yeah, I think they would need to identify categories where they may be too dominant in a specific category of goods. So in the case of pharmaceuticals, if this merger would effectively give Acado and or Agostini a monopoly on cough medicine, for example, in Jamaica, they may need to exclude that from the transaction. So Massy Distribution Jamaica may opt to keep the rights to distribute that, where all the other products are then transferred to Acado's portfolio. It would be something along those lines. There would be certain products that would need to be carried either by Massy as a standalone entity, or if it survives, or a new entity, or given to a competitor that is also in the distribution business in Jamaica. And that would be the major concern. I think that they are really focused more so on the healthcare and pharmaceutical sector and how that impacts distribution as opposed to food or other types of goods, where the goods that are more discretionary, right? So they're not worried so much about shampoos or beverages, but they would definitely be much more concerned about pharmaceutical and probably to a lesser extent food. So to the extent that Acado and Massy may be too dominant in food or pharmaceuticals, they may need to separate that out from their portfolios in some sort of way.
Now, from an investor point of view, what does this mean to shareholders and company owners when a takeover like this occurs? I mean, in layman terms, does it mean Massy Distribution Jamaica shares are owned, now goes to Acado? And what are the options for them moving forward?
Yeah, so I think that, this is the second transaction actually in recent times that Agostini would be making with Massy, right? And interestingly enough, there's an overlap there in terms of healthcare. Agostini and the healthcare group within Agostini in particular would have purchased 22 pharmacies from Massy's retail division, right, in Trinidad. So this is part of a broader exercise that Massy is doing, where Massy is exiting businesses that they deem non-core in order to focus on businesses that are more profitable. Agostini, Acado, and Agostini's various subsidiaries have demonstrated that they're very, very, very good at distribution, right? And as a matter of fact, they're also taking up distribution for other major companies such as Unilever, right? So they're able to focus on that business because that is a business that they see themselves competitive in and that they have demonstrated competence in. So it's likely that Agostini will benefit from additional market share and market access in Jamaica, and it should translate into higher profits and a higher share price. Massy, on the other hand, they're benefiting from receiving that cash in hand so that they can invest in businesses that they are more focused on, which may include automotive, it may include energy, which is another big focus of theirs. They're doing more acquisitions in the US and Latin America. So it's likely that they would take some of that proceeds from that acquisition and invest in those markets, which would then diversify their hard currency revenue and also bode well for their stock price. So it's a win-win for both parties, which is why they're both very keen on getting this transaction done.
Yeah, it's very interesting because, you know, Massy recently cross-listed on the Jamaican stock market, and to see them shedding so soon, it's something quite piquing our interest here in Trinidad and Tobago as well.
I suspect that you know, again, they're selling businesses in Trinidad, they're selling businesses in Jamaica, they're selling businesses in other parts of the Caribbean as well. As far as Jamaica is concerned, I'm pretty sure that there are ongoing capital needs that they have in their industrial gases business in Jamaica, which they also purchased the remaining shares that they didn't own, right? So I wouldn't be surprised if we see more of an investment into that part of their portfolio in Jamaica. But as I mentioned, they're also making acquisitions in the United States, in Colombia, and I wouldn't be surprised if they are looking at other markets in Latin America as well. One thing that they have been very good at is redeploying capital. So I don't think that shareholders of Massy need to be concerned about how that capital would be used. They have a very consistent track record in taking the proceeds of divestitures and generating higher return and higher profit with those proceeds.
Quite an interesting take there. Thank you very much for shedding light on the situation, and we look out to see the outcome later on in this month. Thanks for joining us today.
Thank you.
And special thanks to Mr. Cooper for speaking with us. Up next, our This Week in Carib Money History segment.
We want you to advertise with us. Join us as the premier business magazine and news outlet covering the Caribbean. Contact us today at 868-783-5094.
Welcome back. This week we go back to 1991, where young Trinidad and Tobago Unit Trust Corporation began the process of expanding its Caribbean reach into neighboring markets. In June 1991, Trinidad and Tobago's Unit Trust Corporation began eyeing its CARICOM neighbors for possible cross-listing, with particular interest in the Barbados and Jamaican markets. The investment company had already filed for the relevant permissions from the Securities and Exchange Commission, based in Washington, D.C., to make its way into foreign markets. The confidence to do so came from a strong performance in the previous year, 1990, and according to the then chairman Ralston Nelson, this would lead to the ending of the year 1991 after the decision, with the corporation recording mobilized savings in the community of close to $1 billion by the end of 1991. Justifying its exploits outside the local market into the region came with seeing this strong performance and impressive gains in the Jamaican Stock Exchange. Outside of the region, the UTC was looking at establishing its third unit scheme in the United States government securities, U.S. equities, the Unit Trust Corporation's first unit scheme and American depository receipts of Canadian and British corporations. They aim to ensure the structure of international financial transactions between Trinidad and Tobago and the rest of the world was there to serve as the catalyst for its entry into Canada, United Kingdom, Europe, and Pacific Rim states. The UTC would go on to parent company over the Unit Trust Corporation Financial and Investment Advisory Services Limited, registered as a branch under the Companies Act of Jamaica until 2022, while it has continued expansion in the region through its UTC Global Balance Fund Limited, GBFLC in St. Lucia, St. Vincent and the Grenadines, and Grenada as the most recent. An interesting perspective of the Unit Trust. We take in some short messages now. Stay with us.
We want you to advertise with us. Join us as the premier business magazine and news outlet covering the Caribbean. Contact us today at 868-783-5094.
We want to thank you for joining us for Carib Money Report. I am Kimberly Ramkalawan. See you next week.